What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig. We're going to be going over the markets. I am finally back from vacation. We've got the dump we've expected. Are we going to go lower? How much lower? What are the areas to watch? We're going to go over all that. This is going to be a longer video. Stay and watch the whole video. If you can't stay and watch the whole video, there's no use in watching because I'm going to go over a lot of information and a lot of ideas here. We have been totally correct so far. Let's see if this continues. Before we begin, make sure you scroll down, smash that thumbs up, leave your comments down below, and make sure you're subscribed to the channel if you haven't already. Also, make sure your notification bells are ticked. That way you're notified when I post new videos. I may do a live this morning. Let's see if we can get 1,000 likes on this video. If we get that, I'll do a live this evening. Let's take a look at the pre-markets. The Dow is up 76 points, S&P down 149, NASDAQ up 75. Remember, guys, just looking at the Bitcoin chart alone will not help you. You need to take the markets as a whole. I press this issue. I talk about this all the time. People just don't seem to get it. These guys that are only watching Bitcoin do not understand how markets work. All right, let's get into it. There's a lot of stuff I want to talk about. Like I said, first of all, look at the Dow. We are below the falling channel that we've been talking about. We're below that 30,700. We may bounce around in this area for a while, but remember, I said once we break this and start opening and closing dailies under it, and let's see where we are right now. So far, we closed a daily. We have not opened and closed a daily below that. Once we do, I think the markets are in major trouble. If we can remain above this, get back above this and back inside, which it's not looking too promising right now, guys. It is looking very grim. And I've showed you guys the big picture chart for the Dow Jones being right here. If this was to happen, you can see the similarities in the market structure. Remember, guys, market structure is the way to look at markets. Look for structures in the bigger time frames. You know, if you're swing trading, you usually in the daily or 4 hour, but the macro will give you the best idea of what's going on in the big picture. In a bear market is not the time to long unless you're scalping, but that's up to you guys. We're going to talk about a few things right now, like everybody says, you know, just hold, just hold, just hold. Markets always come back. Well, they usually do come back. But if you would have held up here in the Great Depression and dollar cost averaged all the way down, you would have lost your ass for about 30 years. And reason being, it took 30 years to get this all-time high way over here. This was, where did it break the all-time high? Over here in 1954. Where did it dump? 1929, so about 30 years. But if you would have held dollar cost average up here, it would have took you a long time to get back to where you were. Not saying that's going to happen for sure, but I'm saying that's something you need to look at. And we'll also look at that in the Bitcoin to Amazon comparison chart. But again, they say millionaires are made in market crashes. That's because they buy down here, not because they held up here. All right, let's take a look at the DXY. So the DXY, we had our target here, the break of this wedge, 104. And I'd said if it gets up here and continues to get support, our big target is 105. And I think a break of that 105, you can see that's a long, let's go back here. That's a long resistance line right here. But it does seem that we are in a giant bull flag. And I had said, I think this thing could really moon. Everybody is bearish on the dollar. I've been bullish on it for 2 years. I've told you guys about that. The fake inflation being they raised the cost of fuel so high, oils went up so high, it costs more to move stuff and whatever. False inflation, in my opinion. I think the dollar is going to be very strong. What you'll notice in a big bear market is the dollar gets stronger because people are exiting the stocks, exiting everything and getting into the dollar. People say buy gold, buy Bitcoin. If you look back in history, I've showed this in many videos. Every time the market has a real crash, Bitcoin, gold, even before Bitcoin, gold, silver, everything crashes with it. The only thing that rises is the dollar. I cannot stress this enough. If we break this 105, 106 range for the dollar, it's going to be pretty ugly. We may see just like, 100 years ago in the big crash, the big Great Depression, we could definitely see something like that. And that took about 2 years to bottom. It doesn't mean it goes straight down. There's a lot of bounces in there. People don't seem to understand that. So this is the monthly chart on Bitcoin. We're also going to go over my Ethereum, Litecoin, and XRP charts that are about 6 months old. Our targets are hitting. Beautiful thing. Let's take a look. So, and mind you guys, I got harassed and called a clown and all kinds of things forever trying to give people my view of the markets, which happens to be playing out. And a lot of people did get hurt. Be careful who you follow, guys. So anyways, looking at this as an Elliott wave structure and this being just one big bull market for Bitcoin. There's 5 waves here and there's 5 waves within each wave. This being the end of the 12-year bear market or bull market or whatever. But we could go. People always say it never breaks the all-time high. Well, if you go by Elliott wave structure, this is the all-time high. This was just wave 3. This is just wave 5. Wave 2 could go all the way down to next to nothing. I don't think that's going to happen. I'm going to show you my targets and why I have them. I've had them forever, and we're going to talk about that in this video. So again, make sure you watch the whole video. I know it might seem drawn out, but there's a lot of info here to take in. Another thing I wanted to talk about was, let's go over to the weekly. Once we broke this weekly, we knew this was bad news. We had a weekly sell signal. I made tons of videos talking about it. Also in the monthly over here, right here, I made a video right here when this close happened that we had 3 black crows there. Looks like we're getting 3 more black crows right here. So be careful, guys. This could go much, much lower. And again, I'm going to show you where my targets are. Be patient. We are pretty low on the weekly RSI. Now, we could get that big bounce. Remember, I had said that we could get a range up in here for a while, for a few months before going down. So that's something to take into consideration. Now, let's look at MicroStrategy, the biggest Bitcoin bull ever. Remember, this is the .com bubble, and this is MicroStrategy's chart for MicroStrategy, the company. This was the .com bubble. This is the Bitcoin bubble. Seems to be playing out beautifully, almost same thing. And we broke our lows over here, which I believe is going to happen again over here. I don't know what he's up to. I highly doubt that he's losing money. I think he's doing some shady stuff. He just takes advantage of hyped markets. Be careful. He is not your friend. All right, let's take a look at this chart. This is the 1 week chart. And let me zoom out a little bit so you can see. You can see the RSI is playing out almost identical too. I'm going to get that off there just so we have more room. But you can see I had these targets here, 24.3. Now, if you look, every time we break one of these fib levels, this is the fib channels. For those of you that don't know, we broke our parabolic structure right up here. That's why I called the top over here and said we would get a big bull trap, which we got. I said everybody be calling 100K, which they were. And look where we're at now. So we called this market structure almost to the T, guys. I don't know how else to put it except to be careful who you watch. Most of these guys, when they go all in or long on their videos, is a great time to short. So anyways, right here, we hit our fib level, and this is the point, or the 618 fib at 24.3. So this may be resistance here. You'll notice sometimes we spike back above them, but we don't open and close candles above them. So until we open and close a weekly candle, the same candle above 24.4, somewhere in that range, this is going to remain bearish. Our next level of support, depending on how long it takes, if it was to go straight down now, would be around 10,000, 11,000. Again, it depends on how long it would be to take here. If it took all the way till November, it would be around 14.3. And then our next fib level is all the way down here into the $5,000-$6,000 range. We have targets there, and I'll show you how I get them. And you be the judge of that. I'm not here to tell anyone when to buy, when to sell, when to long, or when to short. I'm here to explain my views on the market. All right, let's take a look at, where is my Amazon chart? Let's take a look at the Amazon chart. So we've been talking about this since December 2nd. If you go to my YouTube page, you'll see I've posted it on my YouTube page. That is the video that'll be playing from December 2nd, the very first to start comparing this. Other people have copied since then, but either way, looking at this as a possible huge 5-wave structure like this, that would get us possibly as low as 37.20. I have a higher target that we're going to look at around 67. I believe if this does play out and the markets crash, sometime in 2023, we will likely see Bitcoin. My targets are $3,000 to $7,000. That's the area I'm looking for Bitcoin to hit. And then do I think it's going to shoot straight up and moon? Absolutely not. If you can see what happened here in Amazon, here was its high. If you look at it here on Bitcoin, it took Amazon 10 years to break that high. So that's why I was saying the dollar cost average, if that's your thing and you got 10, 12, 15 years to wait, you're putting money in that you can afford to lose, then, you know, have at it. But if you was to buy up here, let's see how long that took to break that. 2007. So it took about 7 years to get back to this range. If you got that long, now I'm not saying this has to happen. I'm saying that this is how markets work and you need to understand this. Remember, every pump, I talked about this over and over. Every pump, it's going to get everyone bullish just to drop lower, and then it'll pump again. And then everyone will get bullish again, and then it drops again. Each time making a lower high. That's exactly what we're doing here right now. Now, if we were to break this 48,000 range, that would invalidate this chart. But until then, there's no invalidation here. I've drawn this in this red line. So if we were to come back up like we did up here and test these ranges, that would be around the 36,000 range. So that's still a possibility. But again, these don't have to play out exact. They're just giving us a guide of what to look for. I do not consider this a fractal. A fractal is the same asset. So when you find a move in the same asset that looks similar, these are two different assets. This was the .com bubble pop. This is the Bitcoin bubble pop. What happened here got washed out all the .com scams, right? We need to wash out all the crypto scam altcoins, garbage, get them out of there before Bitcoin can rise. But it took many years before there was confidence built back in this to break the all-time high. Like I said, 10 years. Could we do it in 5? Possibly. Could this not even happen? That's possible too. So far, this is playing out almost identical, guys. So be aware of that. Again, we're going to take a look at the smaller time frames and take a look at our targets here. But you can also see the VPVR right here. When we broke this low over here, we came down, broke it, had a fake out back above, which I think will be wave 4 here, and then came back down to our lows. Now let's take a look at where we at here. The daily. So this is the daily chart that we've had since we broke over here. We hit these 5 waves perfectly. I did think wave 5 was going to go a little bit lower, but in the Elliott wave rules, wave 5 only has to break wave 3, which it did. Came back up. But we were looking for an ABC correction, which we got. It just extended higher than the old high, which got everybody bullish. Huge bull trap. I had said the 3 waves would be a bull trap. Everyone would expect $100,000. Everybody'd be screaming it from rooftops, which they were. And look what happened. Exactly like we expected. Now, I'm breaking this all down for you guys, so pay attention. Then we were looking at this rising broadening wedge. How to measure a move from the rising broadening wedge. We took this here, brought it down to where it broke, and that gave us the 24.3. People called me crazy. And then, you know, everybody got bullish again up in here. These targets don't go straight down just because the measured move line is straight down. That's not how markets work. It showed that that was the target for when we broke this area. And what did we do? We hit that target. Now we're below. Then what do we look at? We look at, let me get the RSI off there. Then what do we look at? We look at the next target. We were looking at this as a bear flag. Our first target for the bear flag was just right here. Let me get these lines out of here. Try to clean this up. These were showing divergence. As you guys know, I'm huge on divergence and EMAs. So let's take a look at the measured move from there. Boom, it hit exact to that 25.4, but we have other measured moves for this. So let's take a look at those. One being, get this out of here. We'll go into the 4 hour. I show the next target to look for after this 24.3, but now this 24.3 to 25.2 should be resistance. If we do get a pump, look for rejection in these areas. Now, if we get back above this, we'll talk about where that could go. But again, this is the daily chart. So let's do this. Let's take a measured move from, see the blue line I have here, from where the structure broke. If we take a measured move from that, the break of the structure. What is going on here? Some of my lines are gone. So let me do this. We'll take this, bring it over here, bring it down to the bottom of the flag, and then we bring this over to the bottom of the flagpole, and that gets us right around. Let me make sure I got that right. Yeah, that brings us right around. We go to the break of the flag right here, right around that 6,800. Now that, there's also the VPVR right here around 9,100, but that 6,800, that's why I get that 7,000, 3,000 to 7,000 range. That 6,800, now see, you can see how long this target took. This took from the break December 2nd to June 14th to hit that target, or June 13th. That took 6 months to hit that target. So this could take 6 months. When would that bring us to? Sometime in 2023. So let's take a look at a little bit closer now and see where we could be going, right? Let's go into the 4 hour. But before we do that, make sure if you guys are interested in trading, definitely check out Prime XBT. By far the best exchange in my opinion. You don't get all the issues with all the crap going on. You can have multiple trades, and you can also trade regular markets, Forex, gold, silver, oil, S&P, Dow Jones from one exchange. You can use my link down below. I also have tutorials on my YouTube page for them. If you use my link down below, you can use promo code SAVVY50. That'll get you up to a $7,000 bonus, and SAVVY25 will get you 25% off your fees. Definitely check it out. It is worth checking out. They are by far my favorite exchange. So this is just a fractal. Like I said, fractals are within the same chart. So these are the fractals we're looking at. I posted this, I don't know, last week, the beginning of the week, of the possibilities here that we break up out of this and then come down, and look what happened. Almost identical, but we're going to break it down and take a look at what's going on. So this is where we called the 48. That's where I put my short in. This is where we called the 48. And again, we had our measured move, which hit perfectly here. Now, what are these? This is that 24.2 area. That's the target of that rising broadening wedge, right? So I keep these all in here so you guys can see. This channel is to teach you how and why markets move. It's not to teach you or to tell you what to do like a lot of these other channels try to do and fail miserably. All right, so let's take a look at, I have this trend line here. We had this breakout, and we had a possibility of 33,000, but everybody was expecting it, so it didn't happen. We did have this break of this rising channel that we were expecting, and you can see what happened after that. Now, I had said if we go below the 24.2, 24.3 range, that should become resistance. So that's the area to watch. My next target is this 17.7. As long as we don't break back above that 24.2. If we break back above that 24.2, then we can look at coming to retest this trend line, which would be around 26, 27,000, depending on if, when, and where it hits. If we break the 24.3, if we are not able to break above that, my target is around 17.7 for the next bounce. If that breaks, maybe this all will happen a lot sooner than I'm expecting. I will keep you guys updated, but this target here, the 17.7, that is looking at this as a bear flag. From the break of the other bear flag, we put this target in. We look at the flagpole, measure the top to bottom, and then we put this over here, and that gets us to around that 17.7 range. That is why that is currently my target. Then we may range around in here for a while, maybe even get a spike back up in the next couple months to that 30,000 to fake everyone out again before continuing down to our other lows. Now this big bear flag, that's our measured move that gets us the 6,700, 6,800 range. That's why my target by middle or end of 2023, possibly way before, is between 3 and 7,000. That is what I'm looking for. Could I be wrong? Absolutely. So far, I have not been wrong on this yet. I will be keeping you guys updated, like I said, and I do have validation and invalidation points. That's what we have to watch for. All right, let's take a look at, so this was my five wave Elliott wave count for here, getting us down to that. This was the video I made before I left for vacation. By the way, check out Tennessee Smoky Mountains if you guys have never been there. But anyways, let me know where you guys are from down below too, just out of curiosity of who's watching and where you're from. I'm curious to see. If you don't usually comment on videos, at least do that. It does help the channel out too. So that was because we were looking at the 1.618 for the wave 3, but could this all be wave 3? That is what we're kind of looking at now. So this was wave 1, 2. Is this a giant extended wave 3? It's definitely a possibility. Could go down to the 20,171, which is a 3.618, or this 19.6 area or 16.9 area, and then get our bounce. But chances are we get a bounce somewhere in this area, come back up, get everyone bullish again before coming down. So this whole thing could be wave 3. Now let's take a look at what that would show. So let's say we go down to that 20,100 range, right? That would go 20,150. Just randomly go in there. Let's say that's wave 1, 2, 3, and let's say we get 4. Look at that. To that 24.4, 24.3 area, and then we still have 5 wave down to that 17,700 area. That is what this would end up looking like. Now remember, when you have a deep retracement for 2, then wave 4 is usually shallow. So 382 fib, possibly the 0.236 fib, which would be around that 22.5 range, which we had talked about. So that's what I'm looking at. Let's take a look at Ethereum. Mind you, this chart is 6 months old. Use the same measured moves here. And you guys knew my target 1919. We bounced around there for a while. I said if it became resistance, next target was 1564. We got a little bounce there, and now we are below. So now our support resistance is 1564 with our target of 680, and that just being a target of the bear flag here. Could it go lower? Yes, it could go much lower, but again, I don't think we're going to see the bottom for Bitcoin until 2023. I'll let you know if that changes. Litecoin, same thing. Break of this rising broadening wedge gave us target 24.4. Still think we're going to hit there. Do we have to? Absolutely not. But if you look at the EMAs, we're still getting major rejections here. Yeah, it's just not looking too good for the markets, guys. But remember, if the traditionals get a little pump today, I'm sure we get a little relief rally. But nothing to get excited for, in my opinion. Let's take a look at XRP. Look at that. We almost hit our first target at 28, but remember, if we break the 28 range, we can go as low as 17. I do have a much lower target, much lower target. If you look at this whole big section here as a descending triangle, it could get very ugly. I mean, I'm talking single cent ranges. So just be cautious, be careful, guys. We'll see what happens here. See if we get a bounce here at this 28.5 area, or real bounce. But again, I see if that breaks, we get down to around 17. But if we are in a longer term bear market, all these altcoins could really get crushed a lot worse than people think. Taking a look at gold, I'd explained to you guys, anytime gold is below this rising channel here, Bitcoin is bearish, usually going down. So unless gold can get back up here, and I've heard people talk about the new gold they found, blah, blah, blah. All that does is lessen the value of gold because there's more gold available. As you guys know, my target for gold's around 1560, somewhere in that area. as a huge ABC correction. Silver, as you guys know, looking to break this 20. If we break this $20 range, 15.50 is my next area I'm looking for. So thanks for watching, guys. I do appreciate it. Don't forget to subscribe to the channel if you haven't already. Go down, smash those thumbs up, get 1,000 likes on this video. I'll do a live stream tonight. Also, leave your comments down below. Let me know where you're from. Let me know what you think of the markets. Thanks again, guys. I'm out.